Hey everybody, and welcome back to Crypto Talk with Jack and Jade. I'm Jack.
And I'm Jade.
We are so ready to dig into the hottest crypto news from October 23rd, 2024 with you.
If you are new here, don't forget to hit that subscribe button so you don't miss out on any of our future deep dives.
All right, let's jump right in.
Sounds good?
First up, we have Binance, still at the top.
The jam.
Yeah, but things are heating up a bit.
Yeah, definitely. Binance has seen a bit of a decline this year in its market share.
For both spot and derivatives.
Yeah, and for those of you who are newer to crypto,
You may not know.
spot trading is buying at the current price.
Right now.
And derivatives are more like betting on where the price is going to go.
Futures.
Yeah, exactly.
But even with this slight dip, Binance has still processed an insane amount.
An insane amount.
$22.5 trillion in trading volume in the past year.
Trillion with a T.
Trillion with a T.
It's hard to wrap your mind around.
It really is.
There's still the big dog on the block.
Top dog, for sure.
Controlling over 50% of the derivatives market.
Yeah, 52% I think is the latest.
Something like that, yeah.
But the competition is getting closer.
They are.
We've got players like Bybit, OKX, Bitget making some moves. Bybit especially more than doubled their market share in derivatives trading.
I think they're almost at 25%.
It's getting close.
Yeah, they're nipping at their heels.
How about that marketing for Bitget? They got Lionel Messi on board.
Yeah, that was a huge move.
Really big.
You know, gotta respect that hustle.
But Binance isn't just sitting there. They've been making a comeback.
They are. They're fighting back.
Since the beginning of 2024, their market share has been steadily climbing again.
Yep. It's a real battle at the top for sure.
It's exciting, but this leads us to a potentially bigger story. The rise of decentralized exchanges. DEXs.
DEX. Yeah, this is where it gets interesting.
This is the real juicy stuff.
Trading volumes on DEXs have just exploded. Over $250 billion monthly.
In both March and June.
Crazy, we haven't seen numbers that high since 2021.
Back in the day.
Yeah, and to put that in perspective,
Give us some context.
for every $1 billion traded on centralized exchanges, 136 million was traded on DEXs as of October 17th.
Wow.
So it makes you wonder,
Makes you think.
is this the start of a move toward decentralized trading?
Could be.
You know?
Definitely a possibility. With the increasing demand for more transparency, you know.
Control over your own funds.
Exactly. Control.
Decentralization has always been the foundation of crypto.
Absolutely. So it makes sense that it would start to impact trading in a big way.
Yeah, it's pretty exciting to see this trend play out.
It really is. We'll have to see where it goes from here.
Exactly.
Okay, so
On to the next one.
let's move on to some good news for Bitcoin.
Okay, let's hear it.
We are seeing a massive wave of institutional money
Flowing into Bitcoin.
flowing into Bitcoin ETFs.
Bitcoin ETFs, okay.
They're currently holding a mind-blowing $13 billion worth of Bitcoin ETF shares.
13 billion.
$13 billion.
Wow. Yeah.
And get this, big players like BlackRock
Really?
and Millennium Management,
Oh, wow. Those are some big names.
who were previously a little bit hesitant, you know.
On the sidelines.
They're now jumping in. They're now significant holders of these ETFs.
Interesting.
What's really cool is that BlackRock's Bitcoin ETF has become the fastest growing ETF in U.S. history.
Oh, wow. That is really impressive.
It really is.
That speaks volumes about how the perception of Bitcoin is changing.
Even among, like, Wall Street.
Yeah, the traditional financial world is starting to take notice.
They're finally coming around.
Yeah, it's like the cool kids have finally decided to join the party.
Exactly.
That's very bullish, I think.
Very bullish. Now let's focus on the recent surge of $2.5 billion
Okay.
into spot Bitcoin ETFs.
Oh, right.
Some analysts initially thought
What did they think?
that this was just arbitrage trading.
Oh, okay.
You know, people trying to take advantage of those tiny price differences
Right, different markets.
between different markets, exactly.
Okay.
But when you look closer, there's more to the story.
There's more. Okay.
The data shows that there's a mismatch between these ETF inflows and the rise in CME futures open interest,
Okay.
which suggests that a significant portion of this investment is actually people betting on the price going up.
Bullish bets.
Bullish directional bets.
So they're not just trying to profit from these small price differences.
Exactly.
They're actually betting on Bitcoin's future.
And speaking of CME futures,
Yeah.
these are contracts that allow traders to speculate on the future price of Bitcoin.
Right, essentially.
And the CME is a big deal.
A major exchange.
Regulated exchange.
Regulated.
So it's significant that we're seeing this activity there.
Definitely.
The futures premium on the CME is actually spiking right now,
Oh, wow.
indicating a strong bias toward
people thinking it's going up.
long positions and a bullish sentiment.
So it seems like institutions might be more confident in Bitcoin's long-term potential than we initially thought.
And then we thought, yeah.
Interesting.
Speaking of confidence, let's shift gears and talk about Chainlink.
Chainlink, all right.
They've just launched some really impressive privacy-preserving technology for blockchain transactions.
Oh, wow.
And this is a huge development, especially for institutions.
Especially for institutions. Why?
Well, because data privacy has always been a big obstacle for institutions looking to get into blockchain.
Right, with all the regulations.
Especially GDPR.
GDPR, yes.
That's the General Data Protection Regulation.
Right, for those who don't know.
It's a set of rules that's aimed at protecting the personal data of individuals in the European Union.
Privacy is important.
So Chainlink is coming in with this new technology that directly addresses these concerns.
Okay, and what exactly have they done?
Well, they've introduced two key features.
Okay.
First up is the Blockchain Privacy Manager.
The Blockchain Privacy Manager, all right?
This allows institutions to integrate their private blockchains with the public Chainlink network.
So they can kind of have the best of both worlds?
Exactly. They get the privacy and also the benefits of a public blockchain.
Smart.
Pretty slick, right?
Yeah, very cool.
And then there's CCIP private transactions.
CCIP private transactions, what's that?
It's an encryption protocol that lets institutions encrypt sensitive data when they're transacting across different blockchains.
Like what kind of data?
Things like token amounts and counterparty details.
So it keeps everything under wraps.
Yeah. It's like a secret handshake for blockchain transactions.
I like that analogy.
Keeps things confidential.
Very secure.
Secure. And the coolest part is we're already seeing real-world use cases.
Oh, really? Like what?
Well, ANZ Bank is using Chainlink's solution to settle tokenized real-world assets under Singapore's Project Guardian.
Wow, so they're settling real-world assets on the blockchain.
It's a big deal.
It is. That's huge.
Chainlink is making waves in the institutional adoption space.
Yeah, they're definitely a company to watch.
Absolutely. It's a sign that this technology is maturing.
Getting real-world traction.
And that it's gaining real-world traction.
It could have major implications for the future.
It really could.
Very exciting.
Super exciting stuff. It's amazing to see these real-world applications starting to happen.
I know. It's really exciting. It shows that the technology is really growing up.
Yeah, it's becoming more tangible.
Definitely.
So we've covered a lot already,
Yeah.
Binance, DEXs, institutional money flowing into Bitcoin ETFs.
A lot going on.
It's been a whirlwind.
Yeah, it's a lot to take in.
It is. But before we move on, I want to circle back to DEXs for a sec.
Okay, DEXs.
I think it's worth really emphasizing how big this trend is.
Yeah, for sure.
I mean, those trading volumes surging to levels we haven't seen since 2021.
Yeah, that's not a small thing.
That's huge.
It really shows how much people want decentralization.
Yeah, they're looking for alternatives to the big centralized exchanges.
Like Binance.
Where they have more control over their own funds.
Makes sense.
With a DEX, you don't have to rely on a third party.
You're in the driver's seat.
You are. And with all the new tech and blockchain advancements,
DEXs are getting easier to use.
more efficient.
Yeah.
So I think this trend is going to keep growing
I agree.
as more people realize the benefits.
I wouldn't be surprised if DEXs overtake centralized exchanges at some point.
In terms of trading volume.
Yeah, that would be a major shift.
That would really be something.
Decentralization winning out.
It would really embody the true spirit of crypto.
The way it was meant to be.
Exactly. So let's switch gears again
Okay, what's next?
and talk about something that's been getting a lot of buzz.
Let's hear it.
Spot Bitcoin ETFs.
Yes. The Holy Grail.
Everyone's been waiting for this.
For good reason, they would make it so much easier for people to invest in Bitcoin
Through a regulated exchange.
without having to worry about all the technical stuff,
Exactly. It would open up Bitcoin to a whole new group of investors.
including those big institutions.
Yeah, who might be a little hesitant to jump into the Wild West of crypto.
Yeah, I'll pay that.
So this recent surge of $2.5 billion into spot Bitcoin ETFs,
That's a lot of money.
it really is. And as we talked about earlier,
Yeah.
a lot of that seems to be driven by people who are actually betting on Bitcoin going up.
Not just arbitrage.
Not just trying to make a quick buck.
They're in it for the long haul.
They're bullish on Bitcoin.
That's a good sign
Very good sign.
for the future of Bitcoin.
It shows that these mainstream financial players are starting to see Bitcoin as a real asset class
A legitimate investment.
with serious potential.
Yeah, like the dam has broken.
And all this institutional money is flowing in.
This could change everything.
I think it
It's
could.
the entire crypto market.
And it's important to remember that this is all happening while regulations are getting clearer.
That's right. Governments are finally figuring out how to handle crypto
which is giving the industry more legitimacy.
More stability.
And that's attracting even more institutional investors.
They like knowing the rules of the game.
Exactly. It's a win-win.
For everyone.
It's an exciting time to be in crypto, that's for sure.
It really is.
But let's not get ahead of ourselves.
Okay.
There are still some challenges ahead.
Like what?
Well, scalability.
Making sure the tech can handle all the growth.
Exactly. Security.
Keeping everyone's funds safe.
User experience.
Making it easy for people to use.
These are all areas that need to continue to improve.
But we've come a long way.
Oh yeah, the progress has been incredible.
Especially in recent years.
And the pace of innovation is only getting faster.
It's hard to keep up sometimes.
It really is. As with any investment,
Always do your research.
understand the risks.
Crypto can be volatile.
There are definitely scams out there.
Be careful.
Approach it with caution.
Never invest more than you can afford to lose.
Exactly.
And remember, knowledge is power.
The more you know.
The better decisions you can make.
Couldn't have said it better myself. So for all you crypto explorers out there,
Keep learning.
stay curious.
And never stop asking questions.
Most importantly, have fun.
Yeah, crypto's a wild ride.
But it's a ride worth taking.
Couldn't agree more.
Well, thanks for joining us on this deep dive into the hottest crypto news.
From October 23rd, 2024.
And don't forget to subscribe to Crypto Talk with Jack and Jade
We'll catch you next time.
for more insight.